Welcome to the Real Estate Hustlers podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. This episode has been sponsored by David Monroe with Strategic Partnering, community.com. On this episode, we will be talking with Hector Hernandez, real estate fund manager, as well as the founder and CEO of Cash for Houses 954. Hector has established a strong track record investing in residential and commercial real estate, including single family, multifamily, and mobile home assets. Hector has built a single family portfolio valued in excess of $10 million with annual rents of more than $1 million. On this episode, we will discuss the reason why real estate market analysis is important, how to conduct a real estate market research like a pro, how to secure off-market deals, apps to use for finding off-market deals, and then what websites for off-market properties we can use. And Hector, we appreciate you coming on the show today. If you could just tell us and the listeners a little bit more about yourself.
First of all, Josh, thank you so much for having me, and I look forward to sharing what I know and what I can with your audience. It's a beautiful Tuesday morning here in Fort Lauderdale, and about myself. Wow. So I don't want to bore you too much, but essentially, I've been in real estate for a little over 15 years now. Started off as a realtor, broker, 2006, 2007. I was going to college, and I've always really been in love with real estate. So I figured, hey, I got to do like everybody else, be a realtor. And it really helped me to gain a lot of experience in dealing with people. Then, as you know, the downturn came in the economy, so short sales, foreclosures, and dealing with those sellers that were in pain really just became my bread and butter, my everyday growth experience, which was extremely helpful. Then that led me to buying my own deals, starting doing fix and flipping, like pretty much everybody else. Got my stripes there, learned a ton about the business, what to do, what not to do, how to buy right, which is key. As you know, in real estate, you make your money when you buy. And from there, that led to building rental portfolios, learning how to time markets, how to study markets, how to choose markets, and just continue to build that portfolio to today's market, where we now run funds and we work with other investors who want to park their cash and receive cash flow basically passively through the efforts of my team and I.
Yeah, that's incredible, and that's the way that you were brought up through real estate, the operation side, and knowing a good deal from a bad deal. It puts you in a very strong position for someone to trust their cash and their hard-earned money with you, because you can point out easily what could be cash flow producing versus what could be a problem down the road. So definitely, I like that experience for sure.
Thanks, man. Thanks. It's definitely been fun to get here for sure. It's been a very enjoyable ride.
Yeah, and it's ups and downs with real estate, but that's a part of it, and that's what makes you stronger in character and just learning from experience. What hides behind walls, what could create more money pits, buying a flip, and then just spotting out different things. So I get it, definitely get it. So why do you choose to invest in real estate?
So like I said, I've been in real love with real estate since I was real young. I was a teenager, and all the great gurus, Carlton Sheets, and everybody was out on the late night television back then. But one thing that always stood out to me was successful people who built businesses and who built their wealth and their success in whatever other industry. They usually tended to come back to real estate and either invest actively or passively through real estate. And so that really became a point of focus for me as to what I wanted to do with the rest of my life. And as I started to do it, I saw the opportunities for just changing my family's future, right? The generations to come. And it became more about generational wealth for me and building a legacy. And I find that there's really no end in sight for real estate. You can grow as far as you really want to grow and as far as your mindset allows you to grow.
Yeah, that's perfect. That's absolutely on point. It's real estate it's not like a light switch that can get turned off. Like you've got a major account and the account decides they're going to do business with someone else. It doesn't. That real estate's going to be there for years and years to come, and ultimately choosing your own fate. I like it. So
And
when
I mean,
you're
let's face it, there's like 17 million other great benefits, right? From the tax benefits to all the other, the leverage, you know it as well as I do, that there's just a bunch of other benefits to being in real estate.
it goes way beyond just purchasing. You got your cash flow, depreciation, amortization, debt pay down, leverage. There's just so many different ways of getting paid with one property. That is absolute. So when you're purchasing a property, you know you've got the right deal. How do you know you're buying in the right market, in the right area?
So for me, it starts with the market. I first, before I decide to move into a particular property, even look at a particular property, start marketing for a particular property, I want to know and understand the market. We focus a lot on emerging markets, and we tend to focus outside of that primary city center market these days, where I got my start in a smaller market. Then I grew to a much larger market, Miami, Broward County in South Florida. That then, once I learned that emerging markets or secondary and tertiary markets, and what I mean by that, it's driving distance to that main market where my resident, the person I'm flipping to, I'm renting to, can drive to that main airport, to that city center for work, if they have to travel for business, but they don't want to live inside that major hub. It's much more expensive to do so. It's more affordable to be outside. There's less traffic, but there's still a lot of job growth, right? So with the second thing we look at is job growth, and job growth tends to build on population growth. If there is, people are being successful, people are able to find jobs, there's multiple industries in that area, then you know that population is going to follow. We want to essentially be in the path of progress, right? In the areas where there's positive economic trends happening, whether there's new shopping centers, new schools being built, and just a plethora of good things happening. It's a good place to live. It's a safe place to live. And people want to continue to grow there with their families. And obviously we look at, the school systems in those areas as well.
Yeah, that's perfect. And a path of progress, that's a if you can find those honey holes before the herd goes and finds it, it's those are where the true deals are. A market that's up and coming, and it's hard to know where those are going to pop up at unless you've got some really good data driving KPIs behind the scenes. But yeah, and then are you mainly in Florida, South Florida, or do you invest out of the state?
So I primarily focus my efforts in Florida. I will partner with some local experts in other areas outside of Florida, but I've been investing here in Florida for 10 plus years, doing real estate for 15 plus. So I really understand the markets very well. And like you said, it's kind of hard to catch those things before they pop off, unless you have some level of local knowledge or just really good data, back office data. And I do, I do follow the data, obviously, as everybody else, from looking at BLS.gov or different websites that provide this type of data. But being out there on the market, on the field, and knowing where things are going is also very helpful. Being able to get to a market and either drive around or vacation in that area. I often vacation in an area where I'm looking to expand into, and it kind of gives me, time with the family, which is extremely important to me. And then it gives me a vibe. I get to feel the vibe in that area before I start to dig in and do all the heavy work that it takes to dig through that data.
Oh, for sure. That website, that was BLS.gov.
BLS.gov, and that is essentially the Department of Business and Labor. It gives you all the stats on labor and some population stats as well.
Got it. And then that'll help us identify if the market is strong enough to support the investment, and then what kind of demographics. Is that correct?
Yeah, exactly.
Okay.
So it's going to give you some demographic information, and then more importantly, it's going to give you that job information, right? Kind of like we said at the beginning, jobs drive population growth. And then from there, you now can start to scale in and look at that particular city, county, state, wherever it is that you're looking to play in, and drill down to what's happening in that area.
Got it. So earlier you had mentioned you make your money on the buy, which is 100%. What techniques do you use to find let's say, motivated sellers to make sure you're buying the property right in order to make money?
So that goes back to the short sale days and the foreclosure days, right? You got to identify a distressed seller for one reason or another. Distressed sellers don't always mean that they're in financial distress. They might be just wanting to relocate because they're retiring, because of family needs, for various reasons. But there is some sort of a pain point, and you need to identify that. And so, obviously, right now I'm referring mostly to off-market properties, but there's plenty of those on the market as well. We could dig in a little bit later if you want. But just adding value is kind of my philosophy, right? It's identifying a pain point for a particular seller, an individual, or, even on the buy side as well. Somebody has a need. Can you satisfy that need? Can you add value to their life?
Yeah, totally. And that's the biggest thing, is being there to help, because if they're in a bad spot and they need out of their house or need to move on, and you're there and able to help, that's huge. What would be, this is a really good question, because I think everyone wants to know this, is how do you find off-market deals? That's where you have a better chance of buying right. So what's the technique that you use?
So we use so I buy using all sorts of mediums, right? So we do foreclosures. One of my partners is an expert at the foreclosure auction. And so there's a lot of great deals there with very little visibility. You have to be somewhat of an expert at identifying these deals. They come with zero guarantees. You buy sight unseen. There's no title guarantee. So you have to really know what you're doing to play in that arena. So that reduces the amount of visibility or people that are even interested in looking. And so then comes all the other auctions, right? Auction.com, hubzoo.com, Zome.com. We've been buying for those for many years now. They've experienced some changes throughout the years, but it's pretty similar structure, except these are now bank-owned properties. And where's the value there? Banks are not in the business of owning properties. They want to let them go. This is a great time of year, by the way, to be buying REOs, because they want to be out by the end of the year. A lot of them are willing to take some greater numbers. And so that from there, then we go to real off-market deals, which we can do in many ways. We can contact sellers by doing a technique that's called driving for dollars. Relatively sure your audience is familiar. It's a pretty old technique. We all drive around every day to go to work, or we go work out somewhere. Myself and my family, we take walks around the neighborhood, and I use this app called PropStream, where I look at a property that looks like the seller may or may not be in distress for one reason or another. The grass is overgrown. It's got deferred maintenance that is pretty obvious. And that app allows me to go ahead and tag that property, start marketing to that seller, contact that seller. I can skip trace their contact and text them, call them, or just simply build a list and then have the backend team take care of that reach out process. The second app that is out there that does the same thing is Deal Machine. So both of these applications, you can do a process that's called, again, like I said, driving for dollars. And by the way, this works for commercial real estate as well. I've done it often, whether it's office building or gas station, or, like many of your listeners, I'm sure, like multifamily buildings, they're on there as well. And you could use a very similar structure. Say you don't want to leave the office. Well, you can run searches on these apps as well on their websites for various indicators. Are they behind on taxes? Are there code violations? Or have they owned it for so long that now it might just make sense for them to exit because they've exhausted all their depreciation value, right? So the property's been in the family for 30, 40 years. Maybe somebody inherited, maybe it is a probate. So just a whole lot of ways of kind of identifying where someone might be done in the cycle of owning that property for one reason or another, and how can you add value? If it's somebody who inherited the property, maybe they're not real estate people and their parents or their grandparents were, and they simply just want the cash flow without any of the headaches. So there's creative deals that could be made there.
That's
Long-winded
huge.
answer, sorry.
No,
I don't know if I
was,
went on too long.
you went ahead and answered a couple other questions I had, which is, I mean, that everything that you just said is kind of like the secret sauce. because if you use these tools, the different techniques, then you're going to find the off-market deals, and you have a higher and greater chance of succeeding in real estate. That's huge. And just being fluent with just helping people with people going through divorce, probate, and just different scenarios that come up, because ultimately you're connecting, you're being the connector of a buyer and a seller. So that's huge. So you're telling me that there are good deals on the market and there's good deals off the market. How do you find good deals that are possibly sitting on the market?
So before I get to that one, you just made a really good point, right? It comes down to being open to helping people, and a lot of there's a lot of takers out there in this world, and where a lot of investors focus is more on their need, their underwriting, what they want, and that can sometimes turn off a seller, especially if you're dealing directly with a seller, an off-market deal. You want to come from a place of love, from a place of help. And if it's not you that can help that person, that seller, by all means, connect them with the right person, because that will, in the end, that's happened to me before, where I was not the right buyer, I was not the right person. I connected that seller with a realtor, and later on that seller referred me somebody who was able to buy their property. So it just works. Be open to helping people, and just be kind to your sellers. Be honest with them. Don't take advantage of them. Let them know, you're absolutely getting a discount on the property, but it's because you have work to do, and that is your job. That's the business that you're in. So Josh, to your next question, on market deals. There's absolutely money to be made with on market deals, both commercial as well as residential. We'll focus a little bit more on residential right now. So I mentioned this is a great time of year to be buying bank-owned properties, right? Your Wells Fargo, Bank of America, and all these other REO property holders are not in the business of operating or owning real estate. They don't want to rent them. Although, Fannie Mae in the last couple of years got into the rehab business. They were turning over a few properties and fully upgrading them.
Wow.
But I think that was just the nature of the market, and their asset managers that they had for so many years, trying to make additional revenue for their business, when they were managing probably hundreds down to just a couple hundred properties. So I'm sure it was just the nature of the business, and it will continue to happen. But there's a lot of others out there that don't want anything to do with that. Most of them don't. They don't want any other rehab, and they simply want to sell that property as fast as possible, get it off their books. It's a non-performing asset to a bank. Banks are in the business of lending out debt. If the second it becomes non-performing, they want it out of their books. They had to go through this whole foreclosure process, and now they want it gone. This is end of the year, and it's end of fiscal year for a lot of lenders. And so I've been very fortunate in the past getting deals done between November, December. A lot of people are relaxing for holidays. My team and I, we're looking at the MLS. We're submitting deals. We focus again on those bank-owned properties this time of year a lot. And we are going to focus on those that actually need work, not the stuff that's ready for someone to move in. There's got to be a value add component, because otherwise, why wouldn't a regular buyer come in and just move right in? And we tend to focus on those that are on the market a little bit longer. So anything that's been, whatever your area calls for, right? If your area things are running on the market 30 days, well, start looking 60 plus days on the market. Days on market makes a really, really major difference for particularly corporate owners, banks, lenders, and those types of institutions. But it also matters to regular standard sellers. Those tend to lag a little bit longer, right? So most sellers are okay with, in my area at least, a 90-day on market, no problem. Once it starts to get into 4 months on the market and plus, the sellers now start to become much more agreeable to selling their property below market value, particularly if they have some sort of, once again, a pain point, some sort of value add needed. The property might need rehab. They might be looking to relocate for a business, for work, or for retirement.
Got it. And I know the market has dramatically changed. I think we all are fully aware of that. And days on the market, I know we've got multiple properties that have went way past what they normally would have, say, 5 or 6 months ago, where they were just almost pre-sold right when it hit the market. Within hours, it went under contract, and all inspections were waived, and this and that. And how is your team dealing with the changing market, or is it even affecting your all's business?
So you're right. It's that we definitely got a little spoiled over the last 12, 18 months, right? Where things were sold before you even listed it. You go on the MLS down here in South Florida, they came up with this coming soon feature. And things were being sold before the open house. There were, had buyers wanting me to cancel open houses, giving me, ridiculous offers, waiving all contingencies. That's now over.
Yeah.
We are now back to a much more normal real estate market. And I think there's still a little bit of room for normality to go, especially here in Florida and some of the areas that we play in, particularly South Florida. You're still getting multiple offers on a lot of deals. They're definitely lingering a little bit more. Sometimes even going past the open house, 20 something. I think our average right now is closing in on like 30 days, where it was down to like 2 weeks, a week.
Yeah.
Which is still pretty normal. What we're doing to shift is we're making sure that we're better than the competition before we hit the market. So it's got to be easier, more accessible to your buyers, and it's got to stand out one way or another. Whether you're the rentals is still really hot, so we're not having to do a whole lot of extra work there. But in terms of sales, we're definitely making sure that the place is perfect, which is something we kind of already practiced before, but now we're even tighter on that, going back to those old checklists where you go right before the open house and right before you put something on market. Everything is nice and clean. It smells good if you're going to stage. And I believe staging might be coming back. It's not back yet, but I believe it's definitely, as the market shifts a little bit more and it turns a little bit more into a buyer's market, I believe staging is going to come roar right back. And so if you're a stager out there, get ready. Your business might start growing a little bit.
Yeah, that's for sure. And I think location, like you had said earlier, is has everything to do with how fast it'll stay on the market too. We had one went under contract a couple weeks ago now, within 4 hours, which was great. But the location had a lot to do with it, of course, because there's just truly nothing else for sale in that area. But those are hard to find, hard to get, and I think that location truly is going to matter too. But and then rentals, of course, right now they're still very, very strong. I think people still want to buy. It's just there's a huge demand, but the interest rates and the inflation and everything else is just taking a toll on the market.
Correct. Yeah.
So,
there's definitely an affordability issue going on for sure for a lot of buyers.
Yeah.
It went both ways, right? In 2019, somebody maybe could afford 350. Then all of a sudden they could afford 400 when rates dropped in 2021, but now they're back to 300.
Yeah.
It came back down significantly, and so buyers' expectations have to shift, sellers' expectations have to shift, and that's going to take a little while, as you know.
Yeah, I totally agree. Hector, we truly appreciate your time today. Truly appreciate your time. If any listeners want to get a hold of you and learn more about yourself and your business and what you can offer them, please let us know what your contact information is.
Well, thank you so much, Josh. I really appreciate being here and getting a chance to share with your audience some of my experience and my background. It has truly been enjoyable. I mean, time flew by. I didn't even notice we were up on that time to go.
That's how it works.
Listeners can get a hold of me 2 ways. My Calendly is on my name here is calendly.com/Hector24. Or you could go to my website, cash4houses954.com. And my phone number is there. My contact form is there. Feel free to reach out. Happy to help. I also do a little bit of coaching and educational for people looking to get into the business. Is my way of giving back and helping the next generation of investors get their break in this amazing industry that we both share in and that we both love.
Yeah, absolutely, man. Couldn't have said it better. That's huge. Hector, we truly appreciate it. I'll post your contact information when we repost the podcast out there. We will be talking soon.
Thank you so much, Josh. Have a good
All right,
one. Take
Hector.
care.
Thanks again. Yes, sir.